Aloha, everybody. This is Paul Brewbaker, principal of TZ Economics in Kailua, Hawaii. I'm presenting four short videos taken from the fall 2025 annual conference of the Hawaii Economic Association, and then adapted over the holidays for a couple local Hawaii chambers of commerce, the Native Hawaiian Chamber of Commerce and the Kailua Chamber of Commerce. So without further ado, I'll proceed with those four presentations, each of which has a separate theme. So let's start with labor market macro dynamics. At the end of last year, we saw that U.S. Uh, employment growth had slowed on a 3-month moving average basis from about 200,000 new jobs per month in 2023 and 2024 to zero by the end of 2025 as the incoming Trump administration proceeded to implement a number of economic policies which weighed heavily on hiring during the course of the year. Job growth in Hawaii has never fully recovered from the pre-pandemic, from the COVID pandemic itself. Employment in Hawaii in 2025 remained just below the pre-pandemic totals of the late 20 teens. And here I've indexed both Hawaii employment and the solid black line with US total as well as private employment, total employment published by the Bureau of Labor Statistics, private employment published by ADP, and I've indexed all three indices to the 2017 average. So you can see how US employment numbers did recover virtually completely, essentially returning to the pre-pandemic trend in both the BLS and ADP cases. Whereas Hawaii employment growth stalled out well before the pandemic and has struggled to get back even to those levels in the 5 subsequent years. Notice that the jobless recovery, the so-called jobless recovery in the early 20 teens, in which both US national and Hawaii employment struggled to return to pre-Great Recession levels, eventually made it there in what ended up being the longest expansion in history, in U.S. history at any rate. But even at the U.S., at the national level, you can see that slowdown in employment growth showing up in a leveling off of those employment numbers nationwide. Real earnings in Hawaii have done reasonably well. You have to take into account the fact that during the pandemic, and this area is the employment loss associated with the pandemic measured on the Rice scale, because of taking into account the fact that because a disproportionate share of employment loss was in lower wage, lower skilled and lower wage occupations and industries, that the average real wage was temporarily boosted by pandemic employment loss. Subsequent to what people talked about in terms of the Great Resignation, a lot of churning where people sought new employment opportunities or sought to acquire remote work opportunities in the post-pandemic, early post-pandemic environment. You can see real earnings return to what was a slowing trend if you attach, and I've just artificially attached the 2022 through 2025 earnings growth to the pre-pandemic earnings growth, which you see lifting off here in the late 20 teens, but then decelerating throughout. So currently, in the last 12 months, we've seen a slowdown in the growth of real earnings in services producing industries in Hawaii, while there has been an uptick in goods producing industries. The weighting is about 90% to 10%, 90% services producing and 10% goods producing. And that's why overall real earnings have been decelerating as we pushed into the mid 2020s. And while earnings have continued to rise after inflation adjustment, the pattern uh, of failure, essentially, of employment recovery is broad across a majority of industries in Hawaii. And when you look at the sectors that have grown in the 2020s relative to 2019, relative to the pre-pandemic benchmark, a couple make sense, like healthcare, which has basically got a structural demographic um, a trend in aging, average ages of the white population rising over time, requiring greater healthcare services per capita. You also see it in the construction arena, which, while that looks like a lot of job growth, of course, is a reflection of the large amplitude of the construction cycle. So we're in a rising phase for construction, although in another video, which I won't post now, but I'll come back to, um, the the question remains open just how strong the 2020s construction cycle really is. Meanwhile, across a broad swath of industries, you can see a mix of both cyclical and structural decline. So, for example, in some industries like financial activities and retail trade and information industries, you see the ongoing penetration of labor substituting technologies, e-commerce in the case of retail trade, and maybe early signs that AI is starting to penetrate in some of these industries. Whereas an industry like accommodation, as well as retail trade, has failed to restore pre-pandemic employment because tourism has failed to come back. And then again, across the board, including on average, total non-agricultural employment in Hawaii has just not come back. You can see the totals in terms of persons employed on the left side of the screen here. Both employment itself and labor force participation remain well below the late 20 teens benchmarks. These are 2017 or 2018 data. And if you look at a measure called the ratio of the job opening rate to the unemployment rate over here on the right side of the screen, which we'll call theta, the ratio theta. When theta is above one, you observe tight labor markets. So job openings, you can think of the demand for labor, the unemployment rate with persons out of work, looking for work, you can think of that as the supply of labor, loosely speaking. So when the ratio of labor demand, the ratio of supply is greater than one, you have a tight labor market. We had that pre-pandemic, and of course, the shock of the pandemic itself. But as I mentioned earlier, the early post-pandemic recovery, the period of the Great Resignation and the spread of remote work, very sudden onset of remote work, restored the tight labor market in 2022, and then the labor market began to reach better balance in 2023 and 2024. With the new Trump administration, presumably partly because of immigration policies, a crackdown on undocumented workers, and heightened deportation and thuggery, you can see the increase in theta that's been happening in the first 11 or 10 months, in 11 months of 2025 in these data. And indeed, what's interesting is even though labor markets, partly this labor market tightening is coming from the fact that post Maui wildfires, we have seen hiring growth in Hawaii. Ordinarily, you'd expect hiring to be about 3% or maybe 3.5% of existing employment. So the churn, if you will, people turning over. A lot of churn post-pandemic as people sought to bust a move, they rethought the meaning of life or rearranged their priorities, decided no longer to be employed in situations where they faced health risk exposure that they hadn't thought about as seriously in the past. For all those reasons, the post-pandemic churn was a period of greater turnover, greater hiring, but greater voluntary separation as well, the Great Resignation, as we called it. But again, this employment growth has been modest, moving the employment ratio, I'm sorry, the hiring ratio from 3 to maybe almost 3.5%, we could call it that. You can see that the estimate of this slope has a widening dispersion. So there's a lot of uncertainty showing up. Not as much as after the pandemic, but a lot of jumping around right here that suggests this might not be durable. And of course, nationwide employment growth has gone to nil. So to summarize, we got a mixed picture. U.S. payroll employment growth decelerated to zero in 12 months of the the Trump administration, first 12 months of the second Trump administration. And employment growth also decelerated in Hawaii, failing to exceed the late 20 teens levels. But tight labor markets actually tightened in Hawaii during 2025, partly because of a rise in hiring against a backdrop of lower labor force participation and a very low unemployment rates, around 2.2% in Hawaii. So a little bit of demand pulling against virtually no new supply, and then pressures on the undocumented workforce from federal immigration crackdowns mean that even without job growth nationwide, Hawaii's job market or labor market remained relatively tight at the end of 2025, and probably, could support continued real wage growth, although that's been slowing as well. And I'll stop at this point for the portion having to do with labor markets, and you're welcome to visit my YouTube channel for the other segments, which will be posted simultaneously. Mahalo.